Howdy y'all, Stock Warden here, back with another video. In today's video we're looking over Sensus Healthcare, and we're going to go over their Q1 earnings report and also a lot of their business highlights that they have had from the beginning of the year and their outlook for Q2. So as it stands right now, the stock is definitely down pretty heavily, where originally on the last time we had made this video, we had posted a bottom end resistance line at $3.67 a share, and it kind of seems that if we were to take that line and bridge it directly across as it stands right now, that would be the new top line of resistance for the stock as it's standing right now, because they had a huge breakthrough through the bottom line and had a massive drop. I mean, practically an entire dollar a share drop coming from this Q1 earnings report. So a lot of what is happening is they had a huge miss for their finances in Q1, amongst other things. So they had a revenue of $3.4 million compared to $8.3 million for the 3 months that ended in March 31st. So now, given that $3.4 million is excluding sales to the company's historically largest customer, which the revenue from that company has increased from $2.7 million in that quarter. So it does say that we only have $3.4 million out of 8, but that number is actually a little higher. If you add in the company's increased $2.7 million into their quarterly revenue, then that would end up being $6.1 million compared to 8.3. So still a $2 million miss, which is quite substantial when you're talking about a company as small as Sensus Healthcare is at this point in time. So they have shipped 14 of their SRT systems. 10 of them were direct sales, and 4 placements under the Fair Deal Agreement program and rental arrangements. So which, if you look at that, that's compared to 30 systems shipped in the entirety of the prior year for last year in 2025, where they had 21 direct sales and 9 Fair Deal Agreement program placements. So with that means that they're definitely looking into doing more than double this year on getting their systems out. So that'll be a lot heavier revenue stream to be able to come in for Sensus Healthcare. So that'll be nice to see how they end up improving from this first quarter with them selling and shipping more of their SRT systems. So they also have a dedicated CPT code for their SRT and IG SRT systems that ended up coming effective on January 1st of this year. So, and that will provide reimbursement certainty for the treatment of non-melanoma skin cancer. So the company experienced increased inquiry levels, stronger pipeline activity, and greater customer engagement from dermatology practices and hospitals following implementation of those new CPT codes. So then the continued expansion of the Fair Deal Agreement program, with treatment volumes increasing 8% over the course of 2025. So 18 active sites and 9 sites are pending activation as of March 31st. So launched Sensus Healthcare Financial Services to further support customer acquisition and financing flexibility for customers to be able to get the help that they need in doing and working with Sensus Healthcare's specific systems. So, and they also introduced Census Link, which is providing a advanced operating capability to the SRT 100 installed base. So they ended the quarter with $18.3 million in cash and cash equivalents with no debt. Okay, I'm going to say that again. No debt. So this is a healthcare company that has their own specific product that is targeting cancer, and they have no debt. That in itself is absolutely astronomically crazy, to think that a company that had such a poor Q1 as far as revenue, where they missed, 25% of what their expected revenue was for Q1 of this year, and the stock to completely drop an entire $1 a share over that, where not only did they miss their earned revenue estimate by 25%, their stock completely dropped by 25%. So that in itself is absolutely crazy on how all of that worked. So, but they also had some of their chairmans and also the CEOs came out with a little bit of market commentary for the first quarter. So, and they stated that we began our efforts in educating and training our existing customer base as well as our many new prospects. We are seeing the benefits of the dedicated CPT codes for superficial radiotherapy move from concept to commercial reality. And that come from Joseph Sardano, which is the chairman and CEO. Then, with these codes now in effect, physicians have greater reimbursement visibility and substantially improved economics to offer SRT and IG-SRT for the treatment of non-melanoma skin cancer, including an approximate 300% increase in the per fraction delivery code. We believe this will meaningfully improve the quality of our sales pipeline, increase customer engagement, shorten the decision-making process for many prospective customers, and, importantly, support a continued diversification of our customer base. As we continue to grow our customer base through expansion of our Fair Deal Agreement program, the launch of Sensus Healthcare Financial Services, and increased interest among independent practices, group networks, and hospitals that historically had not adopted the SRT system. In addition, the introduction of Census Link represents an important step in our strategy to expand higher margin reoccurring revenue streams by bringing enhanced workflow treatment, documentations, and operating intelligence capabilities to our installed base. So as it stands with all of that, it seems that they are definitely moving in the right direction. So their cost on their sales that they had for Q1 was $2.4 million compared to $4 million back in Q1 of 2025. So that was a heavy decrease as well. So gross profit was $1 million compared to $4.4 million back in Q1 of 2025. So comparing the 29.2% versus the 52.2% back in 2025, that's where these huge profit margins that have shrunk over Q1 of 25 is where it's really not looking too hot for Sensus Healthcare. So if they can get back into pushing forward on their SRT systems, on getting more of them out and selling more, then it is very possible that this stock can make a huge rebound. But in the same sense, this is a very, very particular and specific type of technology for the medical field, and they've been having to train and teach and continue making sure that the systems that they do have out are being used properly and to the fullest, so that they can end up growing their customer base and growing their market to also be able to sell more. So that is all I have on Sensus Healthcare as far as all of their Q1 and their earning highlights, along with a lot of the news coming in, plus some market commentary from the CEO himself. So if you like the video, drop a like, comment, and subscribe. So this is the Stock Warden riding off. So y'all come back now, you hear?